Good morning, everyone, and welcome to the European crossover webinar. And we did go on and see this dollar strengthen. Now it's act a little bit tired just up in here, but I thought we would be working lower here in the dollar, and that was not the case here. And I was wrong there. Now we haven't moved to new highs, but nonetheless, as I always like to stress, it's all about the levels. And the key thing here is, and I mentioned this yesterday, was it had to defend that 1388, and there's another level here which was a 73, and it didn't. Yeah, I mean, it's, you can look right here, two different areas right here with the euro right there. There's 1388, and really right here, probably more importantly right there, is 1373. And on both of these we closed below that, which opened the door for them to test lower. Now they're trying to come back here. One of the things that did go and help the dollar was obviously now we have a $50 handle in crude. That has really helped keep the pressure here, really not pressure, but keep the upside move here in the dollar. Is now we have a $50 handle in crude. Can you imagine? We were up in the 70s, and look, now we have a $50 handle. I had mentioned this yesterday, and that kept the upswing. But like I said, I thought that and I was wrong. I took my hit here in the euro. Um, I thought we'd be able to hold and we would defend this 1388 and bounce back up, maybe, come up here towards this, 1430-ish area, whatever. But no, that was wrong on this. And although the euros continue to go and move lower, now we're, trying to come back a little bit here. It looks like a big move, but it really isn't. It's just a move off of the bottom right here. You can see there, just as we come down here and tested almost to the 20 area, so we've kind of got a little bit of short covering. That's about it. But coming into a Friday, we always say hard to fight the Friday flow. So some, I know Simon had shorted at 13.99, so very good job on Simon's part. And we've also seen the cable going and slide back from its highs. And I guess looking back, I guess that was one of the worries here with the euro, because even with the cable moving higher, which overall would have been good news and should have been supported for the euro continued to slide. But technically speaking, getting that close, continue to move lower. And I thought after we got past FOMC, I thought the euro could probably, get improve a bit on that, or not improve, but just come back. And that was not the case. And then really the market just responded on just the plain old technicals, because as it, we got past at 1388, the market dipped and the market came back to around 1383.85 and just sat there, and it wouldn't rally. And if you're going to see some kind of a short covering, you're going to see it then, and we just simply didn't see it. The market did not go in and recover, and from there we just continued to work lower. And so yeah, I took my lumps here right on the euro. I thought we would be able to defend that eventually. Maybe the dollar may pare back. For right now though, that was wrong. You know what I mean? It was just like I said, the dollar hasn't taken off. We've certainly recovered, had a very, very nice recovery. We're not continuing to move past, but like I said, it's just taking a pause, from this area here. And the dollar CAD has gotten past this key area here at 31.71. I was looking for the dollar CAD to probably weaken. Obviously, what's hurting the dollar CAD is certainly the move here in crude oil. And like I said, now with that $50 handle on it, that's huge right there. Probably may end up helping. That's huge, though, and certainly that provides some support up here For equities appeared back, but this pullback in the crude oil certainly has worked against the Canadian currency itself, and it's helped the dollar. That's certainly gone and weighed here on the dollar's move here in gold. We saw gold quickly give up these gains yesterday as it rallied up to 20 and quickly gave it up real fast. Certainly the move here in the dollar continued to has weighed on gold. So go and take a look at the news here. Canadian dollar hits an 8-week low as the Fed affirms a rate hike policy. The Canadian dollar weakened to an 8-week low against its broadly stronger U.S. counterpart on Thursday as oil prices fell and the Federal Reserve left intact its plans to gradually raise interest rates. The Fed said ongoing strong job gains and household spending had kept the economy on track, but it did not explicitly take stock of recent volatility in U.S. equity markets. It didn't raise rates today, but it seems like they are still on the path of higher rates. Hang on a moment. Which causes the loonie to decline a little bit, said Hansen Marge, Senior Managing Director. Higher U.S. interest rates could reduce investors' incentive to buy lower yielding Canadian bonds. The gap between Canada's 5-year yield and U.S. equivalent widened by 3.1 basis points. The dollar index climbed against a basket of major currencies, while the U.S. crude oil futures settled 1.6 a barrel at 60.67. Canadian housing starts rose in October to a seasonally adjusted annual rate of 205,925. The Australian-New Zealand dollars retreat as the spotlight falls on policy divergence after the Fed. The Australian-New Zealand dollars fell from multi-week highs against their U.S. counterpart on Friday after the Federal Reserve underlined the diverging monetary policies between the United States and the Antipodean countries. The Australian dollar was at 72.46, easing from a high as 73.03, touched on Thursday, a level not seen since September. During the week so far, the Aussie has risen 7/10 from its second consecutive weekly gain after upbeat economic data from China, Australia's #1 trading partner. The Kiwi is still up 1.5% for the week so far, building a near 2% gain since the previous week. Yet the rally in the two currencies was stopped by a resurgent dollar after the Fed signaled it was sticking to its tightening path with a more than 75% chance of a December rate hike priced in by the market. On the flip side, the Reserve Bank of Australia has signaled it will keep rates on hold at a record low 1.5%. The New Zealand dollar counterpart has emphasized the need for rates to stay there until 2020. This kept the official cash rate at 1 3/4. On Friday, the RBA upgraded its growth forecast for the next couple of years and also sounded upbeat after the labor market. However, still does not need a strong case for the near-term rate hike as inflation is expected to remain tepid. The RBA statement just reinforced the fact that a lot of things have just happened to still have to happen before the RBA would even think about acting on its tightening basis, said Ray Trill. The U.S. interest rate volatility is going to be an important driver between Australian and U.S. interest rates for the time being. The Australian markets are also looking to the release of the all-important unemployment and quarterly wage figures due next week. The RBA is waiting to pick up in wage growth in the hope that it will help boost the consumer spending and lift inflation to within its target band. The UK economy grows strongly in Q3 with hints of tougher times ahead. Britain's economy picked up pace during the third quarter, growing at the fastest rate since late 2016, but this may prove a high watermark ahead of Brexit, official figures showed on Friday. Gross domestic product produced in the 3 months of September was 0.6% higher than in the previous quarter, matching consensus forecasts in a Reuters poll of economists. Figures from the Office for National Statistics showed. Compared with a year earlier, the economy stood at 1.5% larger up from an annual rate of 1.2% in the 3 months to June, while Britain's economy outpaced the Eurozone's by a large margin during the third quarter, helped by solid consumer spending during a warm summer and Soccer World Cup. There were some unpromising signs for the months ahead. It remains a lot likely that the strong growth recorded in the third quarter is one-off for the UK economy, Sarin Theroux, head of economics at Britain's Chamber of Commerce, said. Persistent Brexit uncertainty and the financial squeeze on consumers and businesses is likely to weigh increasingly on economic activity in the coming quarters, he added. In September alone, Britain's economy stagnated for a second month running, compared with forecasts for 0.1% expansion. Sterling and British government bonds showed little reaction to the data, which were largely expected. The figures showed trade contributed strongly to growth over the quarter as imports of cars into Britain dropped sharply, tallying with weak car sales data. Business investment unexpectedly contracted by 1.2%, the biggest drop since early 2016, added to signs of rising caution among companies ahead of Brexit in March next year. Surveys of companies over the last month suggested growth looks likely to slow sharply in the final months of 2018 as a boost to consumer spending from warm weather and Soccer World Cup fades away. Last week, the Bank of England forecast a slowdown in GDP growth to 0.3% for the last quarter of the year. Britain's economy slowed after the June 16th Brexit vote. Its annual growth rate slipping from the top spot among the group of rich nations, jostling with longer-term laggards of Japan and Italy for bottom place in the rankings. That said, in recent months, warm summer encouraged many to splash out on drinks in the pub and restaurant visits. Household spending remains solid, expanding 0.5% after a 0.4% rise in the second quarter. And the sterling falls below 130 ahead of the third quarter GDP data. Well, we did get that GDP data. And this basically just reiterates what we just went to, other than just stating that the cable appeared to be inching towards clinching an exit deal with the European Union. On to the Italy confirms main pillars of the budget, and EU says too optimistic. Italy will stand by the main pillars of the budget despite the EU Commission's request to revise. Economy Minister Giovanni Tria said on Friday the Commission rejected Italy's fiscal plan for 2019 last month, saying it flouted a previous commitment to lower the deficit and it did not guarantee a reduction in the country's debt, the second highest in the Eurozone as a proportion of GDP. The EU executive gave Rome until November 13th to present a new budget and may start disciplinary steps against Rome later this month. Tria said the government was busy drafting the answers to the European Commission with regards to the most contentious points of the budget, but Rome would confirm its main pillars, he told a parliamentary hearing. Tria said the government was committed to respecting a maximum deficit of 2.4% of gross domestic product. In Helsinki, Dalis Dobrovsky, the Commission Vice President responsible for the Euro, said the EU's executive believed Rome's fiscal calculations were based on overly optimistic assumptions. Basically, the assumption is that if they increase spending, it will stimulate the economy and thus will help to reduce the deficit. We see this actually not materializing, he said. After Tria spoke, 10-year Italian bond yields climbed to 3.46%, their highest in over a week, pushing the closely watched gap over the safer German bond yields back above 300 basis points. And it does say there were some headlines that just came out. Bank of Italy says the higher interest rates have cost Italian taxpayers an extra $1.5 billion. Bank of Italy says Italy's German yield spread must be reduced. Bank of Italy says government GDP growth targets look ambitious considering recent economic trends. Bank of Italy says cuts in company tax breaks would make any future capital increases for banks more expensive. Also, Bank of Italy says borrowing costs risk canceling out expansionary impact of the budget. So really some headlines that don't look too good. Bank of Italy says hopes Italy can reach a deal with the EU that matches respect to the rules with support for the economy. But what they're saying here certainly doesn't look too positive in that light. On to the dollar. The dollar rises towards a 6-month high after the hawkish Fed guidance. The dollar rose towards the 16-month high on Friday after the U.S. Federal Reserve kept interest rates steady and reaffirmed its policy among its tightening stance. The greenback fell sharply following the U.S. midterm elections on Tuesday on expectations the outcome of the vote would make further stimulus measures unlikely. But the dollar bounced back on Friday, outperforming most major currencies, underpinned by the U.S. robust economy. We're worried you're selling the dollar too soon because the Fed is still hiking rates in a tightening labor market and trade tensions haven't gone away, said Kid Jukes. He's making a good point there. The thing is, the dollar hasn't set brand new highs, but it's still hanging on. And like we said, the old analogy, the ocean liner is just going to take a while to turn, although it came back up. But here's the deal. We just had the FOMC, and, they'll saying, don't fight the Friday flows. And, the whole week we've still been up, even though we took the dip after the election, it's come back up. I thought we'd come here and then roll back, and I was wrong here. And I had taken my lumps, as I said, here on the euro. We may still kind of hang around here, eventually stall, but for right now, it's held its own, and right after the FOMC, it had its fundamental event to go by, which the Fed is still hanging on. And then on top of that, the key thing for the year, as I pointed out, was closing below that 1388, i.e. also 1373, which, like I said, I'm one that likes to say, oh, go by the levels. Well, hey, you know what? Those are the levels. So guess what? You're wrong, as in I'm wrong. Because like I said, right here was key. There was actually two levels here. And I was saying yesterday, I go, it's got to close about 1388. Here's 1388. And we got dip below and we did not recover. The more important one is you look here. Here's the more touches. Look at this, 73 right there. Comes in right there, 73. And look at that. Here, here, here. And we closed yesterday also below 73. So it offered the door for them to move lower. And we always talk about targets. Where would they be? Well, the key target for them to hold would be right there, 31, 13, 11. But they came down here. There's some support here in the, when you go to the 2 hour. Right here. The key more, so there'd be a little bit here, 22, which they held about 22, and real important here would be 13.12. Got to give props to Simon, who right off the bat just went short right there at 13.99, and obviously we pushed lower. Once again, this was ominous right here. If you look on the 2 hour chart right here, you see right here, the market tries to, we get here, this is almost, it's a spinning top, but if there was a gap here, you could call it an evening star, but it is a spinning top. Okay, fine, they lost a little bit of momentum, we couldn't go lower. Now here's the key thing here, you get this little bit of a hammer, then the market's still trying to decide. This was really bearish in light of this little hammer after this fall. So we did open the door, but I thought, okay, we'll eventually recover. When we look at this, you lose at 1372. It really opens the door, and I've said that before. If you take out a level, it's not a matter of being right, like thinking, okay, well, that means the market will go here. It's just that the market will, if we break here and we got below this 1372 on the 2 hour, and that was more important actually than the 88, it opens the door for the next target. Here's the next target, which is 1322. It didn't make it all the way to 1322. We talked about that yesterday, but that's where it targets. I mean, that's the target they go to. Whether it gets there or not, you have to be short, or at the very least not be long, and then the market goes down to see what it's made of, and can they make it all the way down there. So I was wrong on that part right here. I thought we could be able to go and recover. The dollar may not go to brand new highs, but it's still, it's still kicking. The legs are still kicking right there. So it hasn't taken its sword into the heart yet. The dollar's still kicking. So let's go and move on. The dollar rose to a 16-month high on Friday as the Federal Reserve kept interest rates steady and reaffirmed its policy monetary tightening stance, cueing investors for a rate hike in December. The greenback fell sharply following those midterm elections, and the Fed is widely expected to keep interest rates in December, which would be its fourth rate hike this year. Renewed strength in the dollar, which tends to appreciate from the trade war, tensions by acting as a safe haven, is pushing the Chinese yuan towards a 7 per dollar. In foreign exchange markets, investors' focus is shifting back to the divergence between the monetary policies of the United States and the major economies. The European Commission forecasts that the Italian economy will grow more slowly than Rome thinks in the next 2 years, leading to much bigger deficits. A standoff between the EU and Rome over the budget deficit and concerns over the bloc's slowing economic growth have dragged on the euro, which has fallen to 4.2% versus the dollar over the last 6 months. The British currency has benefited recently from growing investor expectations that Britain is close to reaching a deal with the EU less than 5 months before it's due to exit the bloc. And lastly, gold set for the biggest weekly loss since August as the dollar weighs. And the dollar certainly having its impact. The gold actually looked a little bit bullish in here. Now we're pushing low, and I got to give Dale props because Dale had mentioned, he's been mentioned for the last couple of days, and he reaffirmed it yesterday. He still thinks we'd move lower, and certainly the dollar's having its impact. One place where we saw the dollar have a huge impact was on this move right here. The gold had a real nice big rally, and we quickly gave it back. And we saw the same thing yesterday when we jumped up real quick to 28 and quickly turned around and gave that back. So we talked about how it was moving very closely with the dollar. And the dollar, like I said, with the Fed and then the end of the week, certainly has gold really on its back foot now. And gold looked like it's open to move higher. And certainly, I mean, it hasn't broken down yet, but it has certainly have to come back to test these areas here. Gold prices fell to the lowest level in a week on Friday and were set for their biggest weekly fall since August on a firmer dollar as the Federal Reserve indicated they will continue to raise interest rates, lowering demand for bullion. Gold has come under pressure because of a stronger dollar. Also, the FOMC meeting showed no change in interest rates. Market sentiment from here could be bearish for gold, said Peter Fung, head of dealing at Wing Fung Precious Metals in Hong Kong. The dollar index, which measures the greenback against a basket of 6 major currencies, was up 1/10%, having climbed about 8/10 in the previous session. We remain cautious on gold here, as roughly half the recent advance seems to have been rolled back in recent days in account of a stronger dollar and more resiliency in the U.S. equity markets. The Fed has hiked rates 3 times this year and is widely expected to do so again in December because of a robust U.S. economy. With the firmer dollar and the uncertainty of the midterms behind us, we see a move through the 100-day moving average and a test of 1208 to 1210 with the potential for the psychologically important 1200 coming into play. They said a note. Among other precious metals, silver was down 0.3 to 14.37 per ounce. The metal was headed for a biggest weekly percentage decline in 9 weeks. I think Blake made a point here on the Face webinar about silver. I don't follow silver, but I believe Blake mentioned something about this potentially breaking down. And we'll get started on the bias chart. Be just a moment. I'll grab some water. To me, the big story has been right here, and certainly weighed on the dollar CAD, getting a $50 handle on crude. I was mentioning this just yesterday. We were down here like, wow, look at this crude, and I think it's like 61.20 or something like that. But I think it's 60.80. And I was like, wow, we're just less than $1 away from a $50 handle, and sure enough, and that's where this momentum is just taking us. It's really come off. So let's go move into the euro. And as I mentioned before, the last couple of days, I've mentioned that before, I always talk about the levels, the touches. And sure enough, like I said, I'd mentioned is it needed to defend that 1388, and it certainly didn't do it. Uh, and more importantly, you can see right here, right there, you see that 1373, and it closed below that, and that opened the door for them to target lower. And that lower area for them to target would be 1322. Now it didn't make it all the way to 1322. It came pretty close, 1327. But as I said, once you close below that, the market focuses on the next target, which here's 1322. It didn't make it. We came within 5 pips. Now we're starting to recover back from that. So the dollar's just easing back a little bit. It's just been down, down, down. One of the things that I focused on just now was, and that's why sometimes you need to look at these patterns in, I wouldn't say a grouping, but the way it sets itself up. So you come back here. Okay, fine. You get a little bit of a hammered bottom. Okay, so you come back here, you're testing this area. You see right here, we close below that. We dip and the market tries to recover, and then we get this. Right after we had this hammer, this is bearish right here. So you have a gravestone doji. Right after you try to put in a hammer, you get this great, it opened the door for this to go lower. Although I thought eventually we would end up defending it, but we didn't. I wasn't sure how hawkish the Fed was going to be, but the Fed has remained hawkish. And the market, it even referenced, not even mentioning or alluding much to the volatility in equity markets. So that opened the door. And then as you go into a Friday, certainly opens the door for them to push even lower. And certainly that's it. So basically it's gamemanship. Like I said, I was buying the euro here, so I was wrong. Okay. Now we still haven't set new highs in the dollar. So maybe we can hold steady here, but that's probably not going to take place for a little while here. Remember, we had talked about over the last few Fridays since when I could remember, every Friday's finished up real strong for the dollar, except for the previous Friday. We'll see what happens, but it certainly is holding its own down here. And with new lows here, when I talk about new lows, I'm talking about taking out the support here at 1388, 1373. Certainly doesn't bode for the euro to turn around and just out of nowhere rally up. That's what it would take to have to turn things completely around, because certainly the momentum is lower. So when we look at the euro for resistance, well, you can see there, right there. And once again, that's why we focus so much on the levels, and why yesterday, I thought we'd end up holding, and I was wrong. But that's what I'm saying. It's all about the levels. So when you fail one level, you just move down to the next level. That's it. And why I focus so much on horizontal support, and to my own detriment, like I said, I probably should have just gone and waited to see and get some confirmation. And that, what, that was my own error here, is that considering right here, considering the downward momentum, it'd have been better for me to wait until I saw some confirmation. Confirmation would have then been grabbing and getting a close above 1406, a 2-hour close. That would open the door then for the move back up here. If you remember, once we got the Fed came out, I think we made up to 10, and then we just started retracing back. So, but I came in, I'd already been long. I came in buying this move as it went towards to test the 1388. And actually, before then, I got long. I think it was like at 1391 or something. And this market never really looked back. It just kept going, pushing lower. And then the market popped back around 83, 85, and just hung and hung and hung. And when we couldn't get any further buying, then we started rotating lower. And then, of course, in Asia, we got a little bit of move back up to 68, and then we started to rotate back lower because, once again, the target. But like I said, when you see the momentum break here, the the correct move And I don't think it's a hindsight thing because it is. That should have been the way. Is that if you're breaking these areas here and the momentum's going against you, and going against because I was long. If the momentum is whether you're long and wrong or whatever, the momentum was clearly down because you had a setup here. And I say a setup here is we had already moved lower. Let me move this arrow out of the way. We'd already moved lower, and you get this little bit of a hammer. So it looks like, okay, now they're going to make a stand. We come back, and okay, there's a little bit of pullback. This looks good, but then we get this gravestone doji. So really, any break is going to add the momentum. Okay, it adds the momentum. But right now, you've got the momentum lower, so you need confirmation if the market's going to turn. Confirmation was going to be then the 2-hour close about 1406. The market popped to 1410 and then started rolling back, and now they're going to push lower, which they did as they got past this 1372. Where's the next target? It's 1322 to defend that. Well, we came within 5 pips, but you can see here now they start to cover. And like I said, so if the momentum is going the other way, if you're going to get a turnaround, you really need to wait for confirmation. That was my error here. It's one thing to think now the dollar index hasn't gone new highs, but like I said, that was my error here in saying, hey, look, just wait until we get confirmation. Wait, because the momentum's going against you. If things are going to change, you need confirmation, because if you get confirmation with the close above 1406 here on 2-hour, then you'll get the follow through momentum. I made a point of that yesterday or a couple of days ago, and I said, hey, if you take out this area, and it wasn't the euro, I think it was, I don't know if it was the cable or it was the cable. We talked about that previously. And I said, hey, look, if you take out this area, it's going to make anybody that's short have to say, oh, wow, I need to get out. Well, it's the same thing here. If I would have got my confirmation, which is a close of 1406, it opened the momentum now for this to go higher. But I didn't. So me trying to catch I wouldn't say catch the falling knife because I thought they would defend the 1388, but it didn't. But here's the reason why: the momentum was already going against it, and the market did try and come up. You see here, it rallied up to this 1410 and then just started to roll back, and then the momentum took itself, because once you got below these areas, the market was then going to be either closing longs or people getting short. So resistance now, you can see 1372. Well, that's initial resistance. We'll look a little bit higher, and so we'd have to say the real resistance there would come in right there, 1396 for right now, today. There's some at 1372, but for this thing to start to, the real resistance would come at 1396. And we're back to bearish. Support right now, well, 1322. There's actually more right here. It's actually right here. 1312, so that's a risk, but there's right here at 1322 if they test this area. We'll go with 1322 because they could take out the stops and try and defend this area. So it's actually not. It's going to be right there, 1312. And we'll leave the 1388. Remember, that was important, but it's actually, we showed that 72 on the daily right there in order to, and 1372 doesn't turn it bullish, and I don't mean bullish, but I mean bullish like on a very short-term basis. All 1372 does is stop the bleed. That's all it does. Let's go and move into cable. Looking here on the daily, it never did make it up to this 3183. This is a bit of a breakout area here. 29.98. That would be resistance right there, 30.84. Here's the pivot. There's that big old pivot again. Remember, we always talk about it, 30.56. But you can always jump above it. This is where the resistance comes in. Right there, 30.80, 30.84. And this is what I was talking about. And see, that's the error I made with the euro. And this is what I talked about here is that, remember, we talked on, we laid this out earlier in the week. And like I said, here I get snookered on the euro. And so this is why I actually highlighted it that day and actually highlighted it for myself. We talked a little bit about it, but I actually highlighted it for myself because look, we had, when this market makes this fabulous run here, okay, and this is what I talk about on a short-term basis, the price structure. Now, sometimes I look at things as like the overall price structure. We talked about that with the dollar yen. Remember, I said, hey, look, it's going to work itself to the upside. I mean, not work itself, it's going to resolve itself. It's almost like it has no choice but to move higher. Good call by Blake. I know Blake was looking at above 14. So you have this fabulous run here in the cable, okay? And so at this point, and this is what I was talking about the euro on the opposite side of the euro. Well, a couple things I want to reference here. So you get here and you're like, okay, it looks like this market's starting to top. Okay, look, got a little mini hammer. Okay, not a hammer, but a hanging man, because look, it's on the rise up here. So it's not a hammer unless you come down, you on the downside. So you get this hammer, like, I mean, a hanging man, very short. The wick's not long. They're like everything's looking good. Go, okay, great. Looks like we may have topped. Look, you could hear the Sunday session. Okay, we got a little bit of a hanging man. Okay. Oh, he got a gravestone judge. Okay. Wow. Now we really look good. We're ready to fall. Oh, wow. I get another hanging man. Well, a little bit of concern, but it's still, this looks, in light of where we are, this looks bearish. I think we can go down another couple of gravestone doges. It is working higher. So that's a little bit of a concern. Then you get this bar up here. And I told you, at this point, you have to get out because technically speaking, just like I said about the euro, when we broke the 31.88 and also the 73, once you get past this area, you're wrong. You're wrong at that point. So anybody who's short, then the market is going to the price, the way the prices have gone, and I'm talking about the charts, not the charts, but the bars, hanging man, gravestone doji, hanging man, two gravestone, yeah, the gravestone doji, but the problem is they closed above this area. They closed above the prior highs. So when you get this up bar, that just means further momentum because anybody was thinking about going short to say, no, I'm not going to go short now. We just closed above these two areas. I'll wait for a better price. And anybody that is short right now, like, oh, wow. I mean, I guess I'm going to move my stop a little bit higher. So we're bumping up against this 30.56, 30.56. Finally, some people succumb here. And then once we hold that, and you can see here, then some people say, well, I'll get long and I'll just wait until we take out 30.56. And the market just keeps carrying itself up. Well, this is what I was referencing to, but you flip it upside down the other way. And that's what I'm saying is I was, long and wrong on the euro. Now, whether the dollar ends up making new highs, I don't think so. But that being said, on a short-term basis, long and wrong. So looking now here at the cable now, we already talked about where the resistance would be 30.84. Where would be the support? Well, on the short-term basis right here, you see this touch and here, right there. So it's going to be on a short-term basis, 29.58 right there. Let's go and move into the Aussie dollar. We already have it on the Kiwi, so we'll focus on the Kiwi for right now. Then we had a resistance of 68.31 and 67.35. Well, we came right here to, there you go, 67.31 and a half. Well, pretty good. And you can see right here, once again, we go by these touches. You see, that's where they're going to go on and target. So that's what I always say is that it's not a matter of, I think the market's going to go here, I think the market's going to go there. It's where's the next target or area of support. In this case, it's 67. We put in here 35, it's 34 and a half. Well, that's why they're 35. And the low was 67.31 and a half. So when they fail here, if you want to call it failing them, let's say pulling back, where's the market going to target? And you look for those areas there. So what will be the next support if we roll back further? I'm not so sure we'll roll back further. But if we were to break past this, once again, you've got this medium-legged doji. You see right here? So a break of this on a 2-hour close opens the door once again, just like the euro. You have to move lower. Where's the next area of support? Well, there's some support in here. And we know that the market's kind of turned around now. So we're looking here. The most touches here comes in around 68.30, 68.84. Let's split the difference a little bit and go. Well, this is where they started to take off. But let's go right here and we'll split the difference right there. 66.74. If they were to fall back here, a pretty good pullback, 66.74. That's where you'd start to want to buy this thing. I don't mean start, but I'm saying what you'd say, wow, I'll come in now. I'll look for the market to defend that area. It'd be 66.74. On the Kiwi on the upside, well, we're not that far away from the upside, and we've defended this area right here, the 67.35. So they could, on a short-term basis, try and make another run back up here. And so the resistance will come in on these touches, 67.93. Let's go move in now to the Aussie. Let's take a look here. Resistance, there you go right there. On a short-term basis, 72.68. We've had a pretty good run here in the Aussie. Probably the market needs to take just a little bit of a respite. So right there would be resistance, 72.68. Now it might be a little bit different once we get into the start next week, but for right now, it'd be 72.68. $72.93, remember that's huge on the daily, so we'll keep that there. Let's go and take a look here on the support. Well, if we do get a pullback, there's some support here, but let's look at a reasonable pullback. Where would the market start to gather? Like, you say, okay, well, I think the market, I'll come in there. Well, it's going to be right here, the 71.86. You can see that's huge right there. Look at that. That's where, if you're buying this thing, okay, let's even take a look at here on a fib. $71.95 is at 38%. 71, so we're going to call it right there, 71.86. Just go with the straight technicals. And let's go into the dollar CAD. Well, we've seen this big move in the dollar CAD, but I tell you what, this is something overwhelming. Just like I always tell you, is that you always want to go to technicals, but overwhelming fundamentals will kick technicals in the rear. And I mean, if you're looking at the dollar CAD, look at this. We've gone from 70, we've almost dropped. Look at this. We've almost dropped $20. That's what you call overwhelming. So, that's huge. So we certainly have seen this dollar CAD move higher. And we're at a very key level right now. $32.06. You can, maybe the market can scratch a bit above here. We'll call it right there. Well, that's not even much, 32.08. So we're going to go with that, 32.08. That's pretty good. To be honest with you, I would have thought that the dollar CAD would even be higher in light of not only the crude, which is just unbelievable. I mean, that's huge. But then also with the Fed, I would have thought the dollar CAD would have been scratching up in here, up in this upper 32. But we're going to go with the technicals. It's going to be 32.08. Certainly bullish. Support here. It's still holding against this trend right here. It did hold. Support would come in right there. Right there. You can see it 31.41. Right there. Look at those touches. And look where they came back for support. You see there? Right there. That's what counts here is these closes, because that's what people are gonna, whether they're trading on an hourly, a half hour, a 2 hour, those are there like, okay, it's time to put up or shut up, you know what I mean? Or like on a daily. So that's why these closes are so important. So I like to look at the 2 hour chart and look right there, 31.42, and look where they found support. And the lowest, a pip and a half below that. So that's gonna be support right there, 31.42. 50 pips away. Actually 53 pips, but 31.42. And wow, look at this dollar Swiss. Unbelievable. Resistance right there. And that's where it stopped. That's gonna be resistance. We'll even pull it back, get a bit closer look for you. Right there. See the touches? That's resistance right there. 60, 80, par 86. Support? Well, it's the old friend right here. Right here, we got par 34. That's a key level. It's actually almost on a short-term basis like a pivot. Look at that. That key part 34. Resistance, support, support, battlefield, now resistance, battlefield, support, 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 now resistance, resistance. So it's part 34. It's pretty clear. It's part 34. See right there. And going back to the euro, like I said, I want to make sure I give my mea culpa, being long and wrong, is that once again, we may find this, the market ends up holding on Monday, Tuesday, whatever, and then we try and work higher. But for right now, you don't fight the Friday flows, and the flows, that's the direction we're going. And once we close below that 88 and 72 here, really open the door for them to target lower, which is towards this 22. Whether they get there or not, that's where they're going to go and target. So it remains weak. Let's go move into the dollar yen. Blake said he thought we'd get about 14. Now, I was making the point, remember early last week, is look at the price structure. And I was looking at, we talked about this on a very short term basis with the euro and the cable. Now, this is what I mean, the overall price structure, when you see how market's holding up. And Blake made the point yesterday on the Face webinar, how it's like, Blake's old analogy about the beach ball, and you couldn't drag this thing down. Mine was similar in the sense I kept saying, it's like it wants to resolve itself. It's not going to be happy until it gets to 1389, and that's what's talking about. It's moving. The dollar's holding up really well. Got to give it the dollar. I still think eventually the dollar will work lower, but right now, hey, got to give it to the dollar. Okay, it's holding its own. Whether or not it's like an ocean liner, it's going to slowly turn. It's holding its own for right now. There's no doubt. And obviously, the Italy thing continues to weigh also on the euro. Also, one of the things that I'll tell you what that I missed on here on the euro, I kind of thought about it, but I didn't give it too much thought, and that was to my detriment. Was look how good the cable was doing. Look how good it did. And the euro simply couldn't capitalize on it. And we know the euro needs a cable. I mean, the euro needs this deal. The eurozone needs this deal as much as the UK, if not more. The eurozone, I talked about this yesterday. The eurozone is no position to be. They don't have a strong bargaining hand because they got their own woes. So that should have been. I like to look at some of those. Blake mentioned sometimes you have to. He mentioned that yesterday. You have to throw out the correlations, but that really was ringing. That really was the canary in the coal mine. Was look how good the cable had come back, and the euro just did not capitalize on that move. It moved higher, but it could have been. We talked about that with the dollar. Same thing working with the euro. The euro should have done a lot better, at least up in here when the cable still kept holding. And that should have been the canary in the coal mine. Like, wow, something's wrong. The canary died. And the euro wasn't reacting, and really opened the door for us to move lower. So, if anything, if you don't want to be if you weren't sure, it should have been traded more cautiously. Now, it's a good thing that it's one thing. It's not Monday morning quarterbacking, but the thing is, I think it's always you learn the most from your mistakes. And that was a mistake for me. The thinking is kind of good, but the warning signs were there. Not only here, I talked about this short-term pattern, but also I thought about that and I didn't focus enough. I was like, wow, the euro should be doing a little bit better considering how well the cable's doing. I mean, usually if the cable responds real strong, if nothing else, at least it's decently supportive for the euro. So that was my error in that, and that was one of the things here. So when we go on here to the dollar yen is, I really thought that we'd make it up here at 1389, and we did. We actually moved even a little bit higher. Blake was looking for a move above 114, so good call on that. But I think we'll just languish here until the market figures out what it wants to do. Eventually, I think it may resolve itself lower, but that's probably, these markets have been trading pretty, a little bit strange over the last few months. So I think momentum may not change until maybe we get a bigger slide in the equities, although it hasn't necessarily responded that much to equities, but it'll probably take us to do that to try and push a little bit lower, and then we'll have to see what happens. But I think we'll just languish in here for now. Resistance right now, right there. You can see that's actually what ran out of gas. And usually I don't like to go. I like to go with where the volume is, but I kind of think we'll languish it. But you see right here, these highs right there, that's what ran out of gas right there. And that's what I think is resistance, because you've got this pullback a little bit here. So you kind of mix it around here, take the bounce of them like right there. So I go right there, 1407 for resistance. But there's that 1389 I've been looking at for a while. I don't think we had it up there for a long time, but been talking about. I thought that we would resolve ourselves to 1389. Support, well, I think it's going to hang around here. That's why I was thinking that once it resolves itself, I didn't think we just turn and go right down. We just kind of hang around there. And certainly with the dollar still staying strong, it's certainly no reason to fall apart. If you see a pretty good pullback on a short-term basis, 56, but I think you have to get a little bit more room. We'll just go with the technicals, because any slides back here are going to be supported on moves down to 27. Now that's a long ways from here, and you can make the case that 56 is where 55, but we're going to give it some room, because I think once again I think we'll languish in here. So moves down here to 27 would be well supported. Let's go on into the dollar index. Got to give the dollar index props on here. We're still hanging around. Now, we haven't gone to new highs, but we're still hanging around. One of the things that I think that it was key for the Fed, okay, fine. But I think more importantly than the Fed was this, and we talked about that. Look at this, crude with a $50 handle. Look at this. We've fallen almost $20. Look at that. So I still say the dollar index should probably be a whole lot higher in light of crude falling nearly $20. I mean, it has fallen $18, okay? So it should be a whole heck of a lot higher. It's not, but there's no denying that momentum, and that certainly has aided and embedded the euro of the dollar. I think even more so than the FOMC. I don't think enough props have been given right here or enough attention in light of what crude has done, and that being supported for the dollar. I think the dollar should probably be a whole heck of a lot higher. Resistance here on the dollar would come in, well, we're right there for right now, 96.90. I would not have thought it made it that point. That being said, look where crude's at. I mean, holy smokes. Finally with a $50 handle, wow, that's really huge. Support here on the dollar index. Well, what I thought was going to be resistance is now going to be support, 96.50. Looking at gold, gold looked like it was open to go higher, but come on, with the dollar, it's tough. So now we look at a fib. Where could we go to? Let's look back. Considering that we're holding up, we've started to rotate lower. You got to do your fib from back here, the actual low. Well, 1216 is at 38%. We've already tested that. So, and usually when you fail at one, you go to another one. This is probably where they've been talking about 1208, and there's some support here, 1208, and just below 1208 is at 50%. And 50%, lots of times the market will like to go there. I think we'll probably want to make it, depending on what the dollar does. But whether or not we make it at 1207, they're probably going to want to test these lows here. We'll see, maybe not till the beginning of next week. But before the market needs to go down here and clean some stops out here, because anybody that got long in here, they probably have their stuff just below that. So we're going to say support's going to be at 1212. On a short-term basis, you'd be looking at 1215, but we have to look where the market could potentially go to. And we're almost out of time again. 1225 is going to be resistance. We're already running behind again, so I don't want to waste too much time. It's still bullish for right now, but it's certainly turning. I think we have to change it. We'd have to dip below to say it's a range, because overall it's still bullish. Let's try to move in. We're almost out of time now. I thought we were going to finish early today, quite honest. 37.26, you can see the pivot. support 3708 right there, which was at 78%. Bonds, well, with the whole Italian mess, it has a little bit of a bid. Resistance is going to come in right there, 59.89. Support right there, 59.66, very short-term support. And the DAX, right there, 13,363, which is still be a pretty good little chunk of fall right here, but it's going to be 1363, a little bit of a stretch here. With resistance coming in at right there, 11,547. There we go. And thanks for joining us here on the European crossover webinar, and good luck trading.